Okay, welcome everyone to the meeting of the Audit Committee of Shropshire Council. I'm Councillor Duncan Kerr as the Chair of the Audit Committee, and the first item is apologies for absence of notification of substitutes. I don't think there are any. Okay, the second item then is disclosable pecuniary interests. So let's go around the room. Has anybody got any disclosable pecuniary interests? None to disclose. And the third item is the minutes of the previous meeting held on the 26th of June. So, and have a mover to move that they are a correct record. Yeah, moved by Kate. And a seconder. I'll second them from the chair. And can we have a vote on the accuracy of the minutes? Thank you. Okay, it's unanimous. Thank you for that. I will just sign them. And then we move on to public questions, and we've had one public question which has been submitted by John Palmer. Do you want to read your question out, John?
Thank you, Chair. How many whistleblowing reports were received during 2024-25 regarding the Shrewsbury Northwest Relief Road scheme? Did anyone come forward with an attempted whistleblowing report regarding this scheme that officers, councillors then discouraged it from being lodged and then investigated?
Thank you, John. I think we've got an answer for you, which I will read out. We can confirm that in 2024-25, there were no whistleblowing reports related to the Northwest Relief Road. We are not aware of anyone coming forward with an attempted whistleblowing report in relation to the scheme that was discouraged. As outlined in the report to Audit Committee, Item 6, speaking up about wrongdoing, we continue to receive an average number of reports each year, which provide assurance that this is a route open to employees, elected members, contractors, partners, and members of the public to be able to report any areas of concern. And as said, we are looking at that item today on this agenda. So thank you, John. A ghostly cough. Okay. We now move on to the member questions. I don't think we've had any member questions, item 5. So we move to item 6, which is the annual whistleblowing report. I don't think we've got anybody to present this report to us, have we? Unless, because I don't think Sam is here.
James was due to
substitute for it. Now, unfortunately, James, I should have alluded to this earlier, is unable to join us for the start of the meeting. He's been called into another urgent meeting. So maybe we need to postpone the items that concern James, and we'll move then to item 12, which is the third line assurance internal audit plan, a report of the head of policy and governance.
Thank you, Chair. So under the Audit Committee's terms of reference, reviewing the risk-based audit plan, including the internal audit resource requirements, the approach to using other sources of assurance, and other work upon which the reliance is placed is an important responsibility. In considering the plan, members should be assured that this is linked to the Council's key risks and provides enough coverage to ensure reasonable opportunity to identify any weaknesses within the internal control environment. The provision of a risk-based internal audit plan is consistent with the Council's goals and is essential part of ensuring probity and soundness of the Council's internal controls, risk exposure and governance framework. The plan has been devised to ensure that it delivers against the global internal audit standards and the requirement to produce an annual head of audit opinion and the assurance framework. In doing so, it can be confirmed that the plan covers the following activities: governance processes, ethics, information technology governance, risk management and financial management. The audit planning framework is detailed within paragraph 7.5 and includes engagement with the chief executive, executive directors, and agreed with the section 151 officer. The plan is usually presented to the February Audit Committee in advance of the financial year. However, it was agreed to delay the finalisation of the 25-26 internal audit plan due to the imminent and significant changes to the Council's senior leadership team, wider changes to the Council structure and operating model at the time. The slight delay in the development of plan has also allowed for consideration of any additional risk areas that have arisen from that. When considering the risk affecting audit areas, account has been taken of which can be seen in paragraph 7.6. This includes changes to services, transformation, the new council operating model, further transformation programmes, refined principles and service planning, budget pressures and savings commitments, previous audit findings, opening and closure of establishments, comments from the external auditors on the scope and coverage of the work of internal audit so that it does not duplicate the work of the external auditor. And also consideration has been given to the audit committee's terms of reference to ensure that we're covering off all of those required areas, and also risks identified through the risk management process at both the strategic and operational risk levels.
Thanks, Barry. Any questions for Barry on the internal audit plan? All very quiet this morning. Malcolm.
Yes, good morning. Thank you. I mentioned this before the meeting, but I think if the scrutiny committee is sort of backward looking and the audit committee is forward looking, I think it'd be good to try and have a linkage between those two so that any sort of lessons learned or anything coming out of scrutiny are included in the forward looking audit plan. So we sort of close the loop on that. I don't know whether that's an action for yourself, Chair, or somebody to have that review.
Thank you, Malcolm. I think it probably is one for us, and we had a little chat before the meeting. I have already written to the other to the leadership and the other chairs to say that I think there needs to be a regular meeting between Kate as vice chair and myself with the chairs of the scrutiny, the vice chairs of the scrutiny committees. We know that certain areas like risk, for instance, the guidance seems to be that we look at the strategic risks, but the operational and project risks, it's suggested by SIPFA, should be looked at by the scrutiny committees. I'm not sure anybody's ever explained that to them. I mean, have that dialogue with them. Equally, we can look at their work programme, they can look at the internal audit work programme going forward. Valerie.
Just to say, Chair, on that point, we will share the internal audit plan for 25-26 with the statutory scrutiny officer as well. Yeah, so they're aware of that.
It's a miss me not to say. I think officers have been liaising very well. You know you meet regularly with the scrutiny officer, don't you, to share your work programmes with their work programmes. But I think what's been missing is the member through the chairs actually agreeing. So I hope that will come in the future. Kate.
Yeah, thanks for the report. And yeah, it's going to be another busy year. And I guess we would have dealt with the budget, the accounts by now, if the agenda was running according to plan. But I think it's just worth highlighting just how important audit's going to be this year in terms of a new administration, new operating model, and also very severe financial constraints. So I mean, it's good to see this plan, and I guess this might be a statement as much as a question, but I think we're also going to have to be quite fleet of foot. And I know we review this plan, but there may be things coming up throughout the year that we need to look at in more detail, because I think this is going to be quite a difficult year for the council. And I also noticed Appendix B, the call off audit list. So these are things that aren't necessarily going to be audited, but might be worth, as a committee, we can, even if it's things are not within the detail of this audit plan, we can look at specific things. And I just highlighted one. I'm not suggesting we do this. In fact, I think I've highlighted two. One, coroners and mortuary service. I believe we may well be there may well be some changes to those services, and we might be they may be moving from the police into the council. So we may want to consider even just an early discussion around that. And then the other one I've just highlighted is the organisational workforce resilience. And again, I'm just thinking that the audit committee might want to have a think about that, because massive changes to the workforce. The workforce is what makes everything work or not. And so I'm not saying we have to do anything right now, but those were two that jumped out at me in that list.
Okay, come back in. Really good points. And I think, you know, from an audit planning perspective and internal audit planning from a third line assurance perspective, the reality is that it's an ongoing process throughout the financial year. So there are revisions to the internal audit plan once it's been approved. So where those revisions occur, if we have an increase in resource, for example, that allows us to realign some of the resource that we have and add things into the plan that we wouldn't have had at the start of the year. And those plan revisions will be reported in quarterly, and they're agreed with the Section 151 officer in advance of that. So as and when we see changes in the risk profile within the organisation, we need to bring something through, then we will do that.
Kate, and then Carl.
Yeah, just to come back on that, thank you. And that's what I'd have expected you to say. And myself and the chair, Duncan, went on some very good training a couple of weeks ago on audit. And I think one of the things that came out of that as well was the audit committee's ability to look at things a little bit more or informally too, you know, so we can request meetings with people at certain stages, and so I just wanted to kind of introduce that to the committee, even, you know, as if we were wanting to look in more detail at a specific area throughout the year.
Okay, Carl.
My question's just been covered off by Kate.
And just going back to Appendix B, actually, the one that struck out to me was about project management. I imagine going forward with a lot of savings to be made, there's going to be a lot more projects, and I just wonder, given our experience, as to whether that's something we might need to think about going forward as to an audit to ascertain how robust and effective our project management practices are. Okay, with that, if there's no further comments, the recommendations are there as the committee is asked to consider and endorse the approach taken to the internal audit plan for 25-26. Do I have a mover of that? Kate, and a seconder? Reece, all those in favour? Thank you very much. We'll then move to item 13 then, which is pension fund. We would do if we got Avatar with us, but I don't know if we have we?
Chair.
Oh yeah, sorry.
Yes, Chair. Sorry, my name's Grant Patterson. I'm the pension fund engagement lead, so I can cover this item for you. So
Thanks, Grant.
Okay. Yeah, thank you, Chair. Just as an explanation, we have an engagement lead for the pension fund and an engagement lead for the council. So I'm here to take you. Well, I wasn't planning to take you through the pension fund plan in detail. Just because I know a lot of members are relatively new to the committee. We've taken this plan through the pensions committee back in March, because the pensions committee oversees the pension fund annual report, which includes the accounts. We do our sort of majority of reporting through pensions committee, which would then hopefully be recommending onto audit committee approval of the accounts. But we bring therefore the plan to you, though, so that you have sight of the work we're undertaking. In terms of the plan itself, the pension fund is well run at the council. We've never had any significant issues with the audit, and therefore, in terms of when we look at significant risk, they are, I suppose, in the way fairly standard for pension funds. Is we have to assume for significant risk management override, and that's just in the auditing standards. And then alongside that, the other big risk that we look at in more detail is evaluation of what are considered to be level 3 investments, those that have complex valuation methodologies or there's significant judgments within them. So, I mean, that's where the audit plan is focused. I mean, I can go into more detail over the overall plan if you want to, but it really, I suppose, it's here for information for the committee given we report primarily to Pensions Committee and then on to yourselves, you will be receiving our audit findings report. The one thing that has changed from here, though, because we produced it back in March, and I know you said earlier you've got the council's financial statements in front of you as well, is that our materiality has moved because it's linked into sort of outcomes and elements. And also when it comes to the pension fund, we do make sure, because I have to provide assurances to the council and other auditors around our pension liabilities, we do make sure that, or we have to sort of cap our materiality to make sure that any assurance we give them can be utilised by those auditors. And at the time of the planning, we didn't know what the final materiality, and it's primarily driven by the council's materiality, would be. We now know that, and that has actually enabled us to increase materiality up to just over 38 million for the net asset statement and just over 14 million pounds for the fund account. And just to give members a little bit of assurance, is if I was just doing the pension fund materiality on its own and not taking account of the emitted bodies, our range can take us up to around about 2% of the gross investment assets. We're currently about 1.46%. I would be happier to go higher on the pension fund itself. So, we'd probably go to 1.75%. So whilst it looks like a big jump, it's not actually, from a pension fund auditor's perspective. I'm quite comfortable with that. So I'm happy to take questions on the audit plan if you have any, or answer any questions that members may have.
Thank you very much. Are there any questions? Yes, materiality sound big figures to me, but I understand that.
It's mainly because the assets, you've got a lot of assets, and it's based upon the asset base, so it's a percentage of that. So.
Any questions?
Yeah. Hi. Thanks for that. Just on the risks identified on
yes.
the page, probably 12 and so on.
Yeah.
Should we have some sort of probability and impact against risks? Because that's what I would normally expect to see. Because you talked about the first two being significant, or the first two being the main ones, and there's a couple of others. I'm just wondering, is there any way we can see the relative, probability impact of those?
We don't tend to report around sort of in that model about probability and impact. I suppose we do have it's not in this page, and I can maybe bring it forward for the audit findings report. Is we do classify risk, I suppose, in auditing terms as significant risks, and these are the ones where we believe that there's a risk of material error, and there's complexity in the underlying figures. So, as I say, the first for management override of control is just a significant risk that every auditor has to consider. And level 3 is primarily in relation to, as I say, the way the assets are valued, mainly private equity and elements like that, where there may well be investment manager judgment, and it's unclear. They're making assessments on what they believe the funds will return. Underneath that, we will still have, you're quite right, risks in terms of that which we are looking at that are scoped in, like the valuation of level 2, etc. So we would call it either normal risks or elements like that. So I think what I can do maybe for the audit findings report is there's a graph we can put in that can help members see where you are, I suppose, on that risk risk graph, or I can produce one offline maybe for you and then send it round if members will find that helpful. So.
Yeah, no, thank you. I think maybe, or even just a sort of high, medium, low, or something scoring like that. Because you've highlighted again the first two, but not the second two significant risk, which rates.
Well, second two. Sorry, the second two have been rebutted. Sorry, so they're in there for communication purposes. They're around about risk of revenue recognition. We have to consider them. So we have to report that if we have rebutted them. The first one mainly because of the income that the pension fund will get with contributions, and that's relatively, from an auditing perspective, relatively straightforward to test. And then there'll be other income, maybe from dividends from assets. So again, we don't think that there's a significant risk of a material error. So we just have to report that we've looked at it and we're comfortable that there won't be. And then also, because you're a public sector body, there's something called Practice Note 15 that requires us to consider expenditure. as well as revenue, as well as income. And again, when we look at your expenditure, it's mainly around, clearly from a pension fund perspective, the benefits of pensions payable. You have systems around that. It's effectively like a payroll. And then the other means be management expenses. Again, from our perspective, you've got a control environment around that. It doesn't, from our perspective, it does not mean that there's a significant risk of material error. So those are reported in there as, because we said that we've considered them, but then we've also rebutted them. So we're not doing the additional work you require to normally do on a significant risk around those. We will just apply our normal audit procedures to those items in the accounts.
Thank you for that explanation, Kate.
Thank you. Yeah, page 25, I think. Yeah, it's just your timeline, and I know we've had some problems getting the audits in time. Are you confident we'll be able to stick to this timeline?
Certainly, I can speak for the pension fund. Yes, in terms of the audit is pretty well progressed already. We normally hit the September committee for the pension fund. The council audit can take longer. I say it's more complex. It's a different approach, and certainly this year, within your account, you'll have IFRS 16 kicking in. So yes, we are confident that we will be able to hit this timeline. So yeah, I don't have any issues. In fact, I'm looking at the file today, there's a lot of it is already completed. I mean, part of that we're managing it around that the audit manager is due to go to a maternity leave shortly, so we're prioritising the pension fund, and then there'll be someone else will be picking up the council audit. So yeah, I'm confident for the pension fund that we're there or thereabouts already for a lot of our work. So the September deadline is fine for us. So we'll let you know if there are any issues, but I'm not identified any concerns to date with us.
Thank you.
Okay, can I have somebody to move that we approve the audit plan for the pension fund? Yep, moved by Malcolm and seconded by Carl. And all those in favour? Thank you. Well, we now come to the items that really need James, but I think there's one or two we can deal without him. We move to item 10. I'm sorry to spread around the items, but I think we can deal with the QARP, is it colloquially called?
It's the QAPE, it's the Quality Assurance and Improvement Programme. Yes, thank you, Chair. This is a paper that the Section 151 officer would normally present. Obviously, I'm presenting that on James's behalf. So within the UK public sector, internal audit historically has been governed in terms of the process that's undertaken in line with the public sector internal audit standards. From 2025, the global internal audit standards will apply in the UK public sector, and there is a SIP application note which the council will work through in the delivery of the work during 2025-26. So this is an annual review. So this is looking back over 2024-25, and during that period, the public sector internal audit standards were applicable. So this report is an assessment against, it's a self-assessment against those standards, and you can find the analysis of that at Appendix A. But I'm comfortable that the council adheres to the public sector internal audit standards in the delivery of its work during 2024-25, and in 2025-26 I am also comfortable that we have a plan in place to meet the global internal audit standards.
Thanks, Barry. Any questions?
Yeah, do you just want to hide the two which are done as partial rather than fully compliant? You just want to get some background and a bit more reasons why we think those are partial, just to help some.
Yeah, so the first partial one is around my role effectively, and the role of internal auditors who may be involved in specific project work or systems advice at its inception. So it could be, for example, that we are implementing a new IT system, for example. If we had an auditor sat on the project board for that, providing advice and assurance and controls advice as that system is being implemented, it could be that their impartiality and from an audit perspective would mean that they'd be unable to audit that particular system going forward during that year. So in that circumstance, we'd identify an alternative auditor to get involved in that, so that there's no issues there. So that is the first one, and then the second one is around organisational independence, and that is in particular around my role of head of policy and governance, where I have other responsibilities as well as being the chief audit executive. So I have operational responsibility for information governance and the council's corporate complaints function as well. So in order to introduce a second line in there, the role of the internal audit manager, and Katie Williams was appointed into that role in 2023. That adds that layer of independence in those areas, and I would not be involved in the audits around information governance, for example. They'd be undertaken separately, and the reports would go in Katie's name, because I'd be obviously responding to the recommendations in those areas. So we do have that level of independence within the structure to allow that.
Yeah, thank you. So why is that one not a yes, fully met? Because what you described, there is that independence. I don't quite understand why it's only a partially met in that instance, because what you described makes a lot of sense to me.
Yeah. I've had a discussion with James about this, actually. It's unfortunate probably he's not here. I think my understanding is we are being absolutely rigorous in our explanations, and because there are other duties that you undertake, that means it's not 100% independent. If you wanted to gold-plated perfect standard, you'd be stripped of all those other duties to try and run the organisation cost effectively. But I would just mean, as we should be, absolutely rigorous to say that means we're limited on. So that's my involvement. If I've got it wrong.
Nothing further to add to that, Chair.
Okay, we've been asked to consider and endorse the conclusion that the council employs an effective internal audit service to evaluate risks, etc., in accordance with the audit standards. Is there a mover for that? Yeah, okay. And a seconder? Yep, Rhys. Thank you very much. And can we all vote on that? Okay, and I'd just like to say, as new to the role, I've been very indebted to the support you've offered me, and very impressed with what I've seen of your team. And I think you've got some good news for us about new people joining the team at the moment. Would you like to share that with us?
Correct, yeah. So since the previous audit committee in June, we've successfully recruited to the senior auditor position that we went out to advert for, and that individual is due to start with us on Monday. So that will obviously have a positive impact on the plan that I've just presented to you. So there will be days added to that plan because of that, and we are looking to further recruit to the remaining vacant roles during the summer.
Good news. Thank you for that. Does that mean we're fully of complement, or do we still have vacant posts?
No, we've still got 3. Yeah, 3 vacant posts
anyway. Okay, I'm not too sure what we do now. I wonder if we can take item 6 without James, which is the annual whistleblowing report. I don't know. I mean, by all hands, we'll have to suspend the meeting until James can appear. Those are the 2 options, it seems, unless you can identify any other items you think we can cover off. yeah, it could lead to issues about what we're saying to council, which we might need James's view on. I think it's obviously, full councils, we need to be, we probably needed James to advise us, it would seem to me, on that. I don't know. I would thought the whistleblowing report, I appreciate you've got no particular expertise on it, but I thought the issues are fairly straightforward with it. But alternative, we adjourn the meeting for 10 minutes. What's your wish, committee?
I wonder whether we should adjourn the meeting until James is available.
Then that we adjourn the meeting for, we'll have to give a time period, don't we, for adjournments?
Do you want to say 15 minutes?
15 minutes. We can always re-adjourn if we need to. So coffee break for 15 minutes. Okay. Thank you. We are back into the meeting of the Audit Committee of Shropshire Council, and we've been joined by the Section 151 Officer and Director James Orton. So we'll move to item 6, which is the annual whistleblowing report. I've been James in.
Thank you, Chair. So just to give a brief introduction to the whistleblowing report. So Sam Williams, the author, unfortunately can't be with us today. She's also the peer review. So this is the annual report that comes to Audit Committee each financial year. It covers the whistleblowing policy, which covers employees, members, contractors and members of the public, and picks up harassment, safeguarding, fraud, other wrongdoing issues, and allows access in through the council's website from any device, or other alternative ways of getting into reporting that. We try to keep this as well, it is kept entirely confidential. The report outlines the way in which whistleblowers are protected from dismissal, and the eligibility criteria for protected disclosures, to make sure that we have a safe reporting environment. So over the last year, 24-25, there were 28 whistleblowing reports that were received, which is 5 more than last year, 22% increase. Table 825 shows how the numbers fluctuate over the last few years. The periods, you can see the way in which this is built up, and 28 is a kind of a fairly average figure. You can see the numbers go between 23 and 35, the maximum, which was back in 2020-21. In terms of the concerns that are raised, the most frequent of those relate to staffing concerns, although there were some around council tax and business rates, and other reports around theft, fraud, and there was a couple within planning and building control as well. The main way in which people tend to raise things through with the whistleblowing process is through emails, although we do have a number that came from through the phone, so 65 phone and 2 by letter, but the balance, the 20 remaining, came through email. Of those 28, 1 was not applicable, so it was taken out, and 7 had no case to answer. Of the remaining 20, half of those have resulted in management action, and the other half have yet to be concluded. So happy to take any questions on the report, Chair.
Thank you for that. Are there any questions on the whistleblowing? Yes, Malcolm.
Yeah, thank you, James. Obviously, it's good to have a policy that people feel they can blow the whistle. However, in my view, even one whistleblowing is a failure in process somewhere. But what I don't get from this is, so what, if you like, what happens next? Yes, there are issues, and I understand obviously there's confidentiality issues and so on, but what's going to be different because of these actions? What's going to change? What's going to reduce that 28 down to fewer next year, and so on and so forth? So do we get that at some point, the outcomes of the management actions?
Through your Chair, we don't report what the management actions are, and they can be very, very minor to quite major, but generally, again, we try to ensure the confidentiality of this by minimising that. Obviously, if we start talking about areas where there's changes, it starts to enable that to be directed. I absolutely take your point. There's an argument that is more whistleblowing better or worse? It's about accessibility. If people are blowing, if lots of people are blowing the whistle and no action is taken as a result of it, then there's something wrong. And if nobody's blowing the whistle, something's wrong. So it's kind of all we can do is report what it is. I fully accept that there will be information behind this which you're not party to. I'm not party to this. This is the point in terms of the confidentiality around this. It is more about giving you the opportunity to kind of consider whether the process is working or not, and any further challenge around that.
Okay.
Yeah, thank you. I was interested. I understand we can't discuss any of these in any sort of detail, but staffing is quite a broad term. Can you describe what sorts of things would be involved in staffing? Is it? I mean, I was thinking, is it people feel there's not enough staff in their team? What is staffing?
So it is a very broad term, and I suppose the point is it's just thinking through what that could be. So it could be grievances, raised in terms of the way that that things are operating. It could be a lack of staff. It could be too many staff. It could be people not doing work when they should be. It's people working when they shouldn't be. I'm going to give you a really, really bland answer because unfortunately it is going to cover all of those. So fundamentally, somebody has raised a concern that in some way relates to a staffing issue. It's about people fundamentally. It's not about there's a contract that's being let inappropriately or there is income being collected, or it's about that. And then let your mind go where it wants to go in terms of what that could be.
Thanks. And could that include things like I don't like how my team is being managed? Yeah.
Could be, but there is also the grievance process. So if somebody has a specific concern, whistleblowing tends to be around I have concerns here that I think management need to know about, which might be I'm being managed in this way by my manager and I want to let them know, but I don't actually want to raise a grievance. But I do want to let them know because I think there's something here which is not about this relationship. It's about a bigger picture. That's what tends to work. But we do have the various different processes that enable people to do that. The point with whistleblowing is it remains anonymous, and so therefore, ironically, in some cases, it's more difficult to implement management action because if somebody then went and spoke to this person over here, it makes it more difficult to implement.
Rob?
Yeah, so again, I agree with Malcolm. When I read this report, the first thing that came to my mind was so what, really, not just like I was reading the policy. But when it comes to confidentiality, I totally get that. Is that confidentiality or dealing with a whistleblower, is it generally kept in-house, or are senior members involved in some of those outcomes? And what my question is kind of going into that, if there is something quite serious that we feel that then needs to come into public domain, how does it get there?
So the process would be if somebody's got a specific concern and it's relating to the way that they've been treated, like an example like James just offered there, it would be considered from all angles. So it'd be considered from a financial perspective. Is there a potential fraud element to that? If so, the internal audit team would get involved in that. Is there a management issue that needs to be investigated from an HR perspective? That would be considered as part of that process. And then the decisions taken on the nature of any investigation that would need to take place. And then that work would work through and a formal hearing would take place if necessary, if deemed necessary by the hearing officer.
Just to finish on that, in terms of then who would be involved within that, it would be those that needed to be involved to ensure that the action that would need to be undertaken will be undertaken. It isn't shared generally at any point, because again, it's about what we do not want is messages getting out that suggest that if you blow the whistle, that in some way you're going to be identified. It's the simple point.
Hey, just a couple of comments. Sorry, Reece, you go first.
Sorry, Chair. Obviously, we've seen an increase of 22% in reports over the last year. What it doesn't say in the report, or at least I didn't see, apologise if it is, which areas are seeing an increase and why might that be?
Sorry, which areas of the authority are? Yeah, we haven't put that information in there. To be fair, we could, I think what we tried to do, and we've only analysed it for this current financial year, but we do that every year. What we could do in future is kind of collate what those themes are and how those have changed. So going back to the point earlier in terms of staffing issues, we could see whether those are increasing or decreasing. And the other thing is that, as I say, planning and council tax business rates were areas that there was whistleblowing about. That's not necessarily about those service areas. That's about issues that relate to those. Again, we can collate those, but it might be that there isn't clear. What turns out is every year, based on the information that's available, they get thematically pulled together rather than saying, here is a matrix and this is how it's changing. But we can certainly look at reporting that into the future if we think that would be helpful for the audit committee.
Just a couple of comments from me, and then perhaps move to recommendations. I did a little bit of investigation. I tried to use the whistleblowing policy. So my first issue is that when you click on the whistleblowing policy, it leads to the website, but that then says that that's not available to staff, but it's not clear what is available to staff. So perhaps that could just be looked at, that routing, because it looks as though we're routing staff to the policy, but that's not the route for staff to use. The other thing is I've recently been appointed to the Fire Authority, and I looked at their whistleblowing policy, and they use a separate agency to handle the calls. So when I put a call through, it went to answer phone. I'm not surprised by that, but it's not the best response for somebody who's thinking of doing a whistleblowing to leave a message on an answer phone. So there are a couple of companies, I know nothing about them. I think one's called Protect and one's called Safe Call, which operate across the public sector as a whistleblowing place where people can make their concerns known. And because of independence of the council, it seemed as though it should be, I'm not saying it should be used, but it should be investigated. So I think probably I'd like to move that from the chair to those two options are investigated. And I think the issue about outcomes needs to be reflected in future reports. And that, to me, that can just be simply to say it led to some action, it led to no action, but some information about what the outcome was from our whistleblowing policy. I think we do need to know, otherwise what's the point of having a policy? I probably disagree with you, Malcolm. I think I'd probably like to see a little bit more whistleblowing about, the numbers for an organisation of our size. And you're right, you can argue it either way, but 20 or 20, yeah, I think I worry that people aren't making whistleblowing reports rather than worry that we're getting too many of them as a market. But there we are. So I suppose my recommendation, I move from the chair, is our comments are, we would like to see some outcomes in broad terms identified in future reports. We would like to see an investigation of whether a call handling, one of the company can handle phone calls, not emails, but phone calls separately from us. And just a bit more clarification for staff, because if you follow the link that's shown there, you'll get to a document which says it can't be used by staff, but I don't know what staff can use. It could just be me misunderstanding. So that's my recommendation from the chair. Is there a seconder for that? Yep, Reese. And can we have a show of hands on that? Okay, thank you very much for that. So we move to item 7, which is also from James, which is the annual Treasury report.
Thank you, Chair. So this is the annual report for 2024-25 financial year. So this sets out the position in terms of our borrowing and investment over the year. Everything that's been undertaken is in line with our Treasury strategy, and the key potential and Treasury indicators are shown within Appendix C, and we are demonstrating that we've met all of those indicators. We're within the safe limits of those. The Power 2.2 just talks about the returns on investment, and they were marginally short of the benchmark. So for many years, we have exceeded the benchmark in all of our Treasury investments, and only recently have we then started to fall below that. And there's a very simple reason for that. Over the last 20 years, we've had high levels of cash. We've been in a position where we had effectively over borrowed. So we had more borrowing in place, which was fixed term, long term borrowing that was in place, which meant that we had high levels of cash. We were carrying lots of community infrastructure levy, capital receipts, reserve levels were much higher. All of those led to higher cash positions. When you have a high cash position, you were then able to make decisions around how long you tie that cash up for in your investments. So if you tie cash up for 12 months, then you'll get a much better return than if you just invest it overnight. So when you have high levels of cash, the levels of liquidity you need with that are only marginal compared to the overall level. So what you're doing is you're turning money around, a small proportion of that on a short-term basis, and you're basically locking other money away for longer periods. That process means that you exceed the benchmark because you're making much better use of that money than a standard level. Where we are at the moment, because cash levels have fallen significantly, and cash levels have fallen significantly, because we've been spending capital receipts, spending reserves, but also as loans have normally and quite expectedly matured, so that borrowing has matured, we haven't then taken that borrowing out again, and that because we've had the cash and we've been in that overborrowed position. So we've allowed that to fall, and that has now moved us into a marginally underborrowed position, and as we move forward we'll move into a much more underborrowed position. Now, if the Bank of England base rate was still down very, very low, then we would be just going out and borrowing long term and replacing that and putting ourselves back into that position. We'd have low level fixed term borrowing, and then our investment levels, because we have a higher cash balance, would then return to improved above benchmark returns. However, because bank base rate is not as low as we think it is going to be, we're expecting it to fall over the next 12 months. Therefore, it is unwise to take out 20, 30-year loans and borrowing to bring that cash position back up. So what we're doing is, in the short term, we're borrowing for periods of 3 months up to 12 months, so that we are not being tied into long-term interest positions. So our interest exposure is lower. However, because we are constantly then having to go out and borrow, we're also trying to minimize that level of borrowing in the short term. So therefore, our liquidity is highly important. So you don't tie up any cash for any period of time. So effectively, we are just constantly, any cash that comes in, we're rolling over for maybe 2 or 3 days, or maybe just overnight, constantly, to get us from earlier in the month when council tax comes in to later in the month when salaries go out. You've got all sorts of payments and stuff in between, but they're the two big areas that deal with the cash flow. So because we're doing short-term borrowing, that impacts on our level of return. So that's why we're below the benchmark. I think it's important to kind of just describe that, because anybody that's been in this authority or knows of this authority for a long time would be quite interested in the fact that we have forever beaten the benchmark, and now suddenly we're not. But it's because of those specific reasons around cash. So the report effectively then just describes the overarching borrowing strategy at Appendix A, and that sets out the way that works. And there is a chart in there on the page 28 of the last page of Appendix A, which sets out the debt summary and the maturity periods. So looking at that chart, we have rules around how much debt can mature in any particular year. So you can see that we try and spread that out. The biggest amounts of debt maturing are over the next few years. That is partly because of, again, that short-term borrowing feeds into that. A lot of the debt that falls between 2039-40 through to 2048, you'll see it's quite a flat line. A lot of borrowing maturing at that a year, 1 year at a time over that period. A lot of that debt is the HRA debt, which we took out a few years ago and built in. And you can see there's some money market debt, which has much longer maturity levels. So that's not PWLB. PWLB, just for clarification, is the Public Work Loans Board. That is funding that comes from the Treasury that only local authorities are able to access, and at much better rates. Occasionally, however, the market can beat those rates, and when that happens, we take that borrowing in. But as you can see, some of that takes us through to 2080. So this is very, very long term, but I'll be looking forward to being here when those appendix B just talks through the investment strategy and the way in which that works in terms of the proposed the expected bank rate changes. And appendix C then talks through the potential indicators, so it gives you the indicator and the actual position over that period, demonstrating that we are falling appropriately within those targets as necessary. So happy to take any questions that you want to share.
Thank you for that good explanation, James. Any questions?
Yeah, James, just a clarification on the short-term debt. Obviously, it's due to mature. What happens when it matures? And the second one is, when does the level of total debt of the council become unsustainable?
So in terms of the debt, what happens? So we will literally take out borrowing with whichever institution, PWRB. At the end of that period, that debt just gets automatically reclaimed from our bank account. What we would do is we would be looking to see whether there is available cash at that point in time. So back to the liquidity question, we'd make sure there's enough cash in for that to automatically be repaid, which may mean we take out short-term borrowing. It may mean that we release an investment. It may be that we take out long-term borrowing. One of the things that we are you would normally do is to reschedule that debt, but again, it depends on the rates that we can get at this point in time, whether that's appropriate. In terms of the second question, which I think was around affordability, was it?
It was around the total level of debt carried by the council has increased significantly this year. When would that level of debt become unsustainable for the council?
Yeah. So through you, Chair, this comes back to the nature of prudential borrowing. So the fundamental factor within borrowing is that it's affordable. So whenever the whole borrowing schedule for the authority on the revenue account side, there's something called the minimum revenue provision, and that minimum revenue provision is calculated to ensure that there is enough funds in place to cover the cost of financing that debt. So what happens is your level of debt over here then is reflected in your MRP over here, which is in your revenue account. So if this starts to go up, this starts to go up, and that's where you see the unsustainability bit. Now, there's an important point within this, which I do like to bring out, but historically, going back sort of 20, 25 years, the government changed the way in which it funded highways capital expenditure, as an example. So in the past, it was funded by a grant, but there was a period whereby the rules were changed, and what the government would provide us with was effectively the MRP to go out and borrow, to then go out and spend on highways expenditure. Okay. Now, when I say the government gave us the MRP, what they did was they built into our revenue support grant an amount of funding that would enable us to fund that level of borrowing. So you've got an extra £500,000 going into your revenue support grant. That allows you to borrow. Well, actually, if you get really good rates, that allows you to borrow more or less. So it became then a kind of a factor for the authority to manage. The problem is that back 12, 13 years ago, the level of RSG was for Shropshire was £64 million. It's now 7. So all of that funding that the government gave us to cover that debt, we've still got that debt because it was 20, 30, 40 years of debt. But the actual funding to pay for that and service that debt has been removed. So that is a different factor in terms of that affordability and that unsustainability factor, because what we have is a series of debt that we now have to create internal funds to be able to service. So that has pushed us into a slightly different position. What we have not done though as an authority, which is maybe where you were coming from, some authorities have gone out and borrowed lots and lots of money for all sorts of commercial purposes, as an example. So their level of borrowing is huge. It's funded investments in a kind of commercial type activity. Providing there is a durable income source that comes from that, that services that debt. However, if that durable income source starts to fall, then you still got to service the debt and you don't have the income, and that's where the things like Croydon and authorities have had difficulties in terms of that. So the potential indicators are there to protect us around that, and the medium-term financial strategy in terms of the MRP calculations are how we ensure that affordability is there.
Right.
Thanks, and I see you're sensibly modelling the idea of the interest rates coming down towards the end of the year, which hopefully they will. We are in quite turbulent financial times, not just as a country, but globally. Have you built in contingency planning for the interest rates remaining higher as they are now?
So through you, Chair, we work with our Treasury advisors, and we have constant weekly conversations with our advisors. They're the ones that do a lot of these projections. They're the ones that are working through this. They have lots of clients around the country, lots of local authorities and other clients around the country. So we are relying on their advice. Okay, so their advice at the moment is that they would expect interest rates to come down. Now, the point is, there's whether rates physically come down, and there's whether the market is pricing in a reduction. Because if they price in and they get it wrong, but we take it out of that priced in reduction, we still get the benefit, and they're the ones that lose out. That doesn't happen very often. That's the bookies kind of losing money, that kind of approach. But you know what I'm kind of trying to say there. So we work on the advice that they are providing. What they are suggesting at the moment is, based on the information they have, wait to take out longer term borrowing, and they are suggesting we borrow on a shorter term basis. If they start to feel that sentiment is changing, then they will advise us that we borrow longer term. So we have contingency in place around that. We're making assumptions around what that level of borrowing will be. Now, if it moves slightly to a slightly worse position, that's not going to be material. If it moves significantly, then that would have an impact. So there is an absolute risk there. I'm not going to suggest there isn't, but we try and manage that, and we get regular updates to then try and ensure that that would not materialise in anything. Again, though, the advice could be, we're not expecting rates to come down, but we are expecting them to come down over a longer period of time, perhaps, in which case the advice may still be borrow shorter term. And so we're having to factor that in. But we're using people that are in that market all the time, and as I say, providing advice to lots and lots of local authority clients, and we also triangulate that with other authorities as well as part of that.
Okay, I'll probably draw a discussion to a halt there. We've got a recommendation on 3 that we approve the actual 20. Oh, sorry, apologies, Malcolm. It's
Sorry, hopefully a very quick question. So the initial introduction, James, thank you. That was very helpful to understand about the return on investment cash balance. What would have helped massively in that would be some sort of graph of historical information to show trends, because I think this is an annual snapshot, but to show trends of cash balances, return on investment, whatever those KPIs are, would help in that instance. So can I ask maybe for future that you look at what are the KPIs and can we plot them over past 5 years, 10 years to show how things are trending? Thank you.
Yeah, well, if we take that into the recommendations for future reports, we approve the actual 24-25 Prudential and Treasury indicators in the report and note the actual report for 24-25. Do I have a mover of that? Kate and a seconder? Yeah, Malcolm, put that to the vote. Thank you very much. We move then to item 8.
So if we could, Chair, I was hoping we could take item 8 and 9 together, and ideally take those at 11:30, when I've got some other technical individuals that can help talk us through that. What I would propose, I think we've still got item 11.
We've got to do.
We can do item 11, and then as soon as we've done that, we will go back to this, whether it's 11:30 or not.
Yeah.
But they will arrive at 11:30. So if you can
That's fine by me.
your difficult questions.
Actually struggling here, but we will make it work. Item 11 then, which is the annual assurance report to council.
Thank you, Chair. So item 11, annual assurance report to council 24-25. So this is the document that goes through to council every financial year, and is presented to council to try and give an oversight of the work that was completed over 24-25, and to give assurance in terms of the way in which audit committee has operated, the things that have been looked at and reviewed and considered as part of that, the value that's been added from the internal audit team, the work together that's been pulled from that, and as part of that, a statement comes from the chairman of the audit committee, which is attached at Appendix A. Now, clearly, in previous years where the statement comes from the chair, who is actually there over the last 12 months, is helpful. Unfortunately, sorry, I can't say unfortunately. I didn't mean anything around the chair. I meant in terms of the process, it is unfortunate that we don't have that. We weren't able to kind of overcome that. So therefore, what we have is a statement which is an amalgam of the findings of the last financial year, but also with Duncan as the chair, putting his stamp on it in terms of some of the areas that need to be drawn out. There were over the last 12 months, certainly Kate was here, and Roger Evans, as the portfolio holder for finance, did sit on the audit committee over the last 12 months as well, so can provide some assurance around the statements and the work that was being completed over that period. So the annex to the appendix sets out a statement of all of the different assurance reports that have been received by audit committee, and an assessment of those. So ultimately, what this provides is the opportunity for council to consider the work of the audit committee, and to challenge or gain assurance from that as necessary in terms of the way that committee is working and operating going forward then over the next 12 months and years beyond that. So happy to take any questions, or again, you may want to make a statement yourself, Duncan, in terms of that.
Thank you, James. I do feel there's a bit of an imposter in terms of presenting the report on behalf of a body that I wasn't on, but there we are. That's the process, isn't it? So you've got the report there. As you can see, we are asking for an increase in the establishment for the audit committee. That's really for two purposes. One, to make sure that all parties are represented. I'm very conscious we haven't got a member of the Conservative Party here, and I think it's important, if we're going to be effective, that we do have representatives from all parties. But also it gives us a few options about how we manage the workload, because it's quite a wide workload, quite a demanding workload, and it may make sense to have either a couple of members specialise in a particular area, or even working groups. I've not got any fixed views on that, but with a body of 9, we will be able to consider that. I will also be recommending to council that we don't appoint substitutes. That's a recommendation from CIPFA, and I think because of the nature and the cyclical nature of audit, it's quite difficult for somebody to come into one meeting without knowing the context for everybody else. And I think moving to 9 should enable us not to avoid reliance upon substitutes. Well, with that, I mean, I think my personal view is that the audit committee did a very effective job, but we've got a lot more work still to do, and we need to build on the work that's gone before and take that through with the new administration and new council. We have some very considerable financial challenges facing the authority, and audit is going to be central to that. Are there any questions or comments on the report? Okay.
Thank you, Chair. Yeah, and just to back up what you're saying in terms of, I think the audit committee could have quite a crucial role to play over the coming year with the various challenges that we have. obviously the 6 years of limited assurance is of concern, and I think it will be important to highlight the importance of this to the wider authority. And in fact, it's very nice to see a member of the cabinet here today, Roger Evans. I suppose it's a comment on. It's only been a year since I've been in, but I would certainly like to see more members of the senior administration, both portfolio holders and also directors here. I mean, James, you've done a very good job of substituting for Sam Williams. I suspect you had a good reason not to come, but we haven't had many directors, for example, at the meeting, and I think that would certainly be of benefit to have more senior managers and portfolio holders come along to the meeting to understand the committee better, and also to fully engage with it as well. So I think, you know, an example of how Audit did look at things, I think certainly over the last year in terms of the project, was Northwest Relief Road, where the external, not only internal audit, but external auditors applied quite a bit of vigour to the overall process. I think Audit has a really important role to play, and I'd like to see a few more, not just audit committee members, but senior managers and portfolio holders and cabinet members here.
Just a couple of words to build on what Kate was saying. I think there's some concerns about the whole culture of the organisation is performance orientated and focused rigorously on value for money and controls. And the more we see of the leadership and the more directors, more we can have reassurance or indeed assurance regarding that. If we don't see them, it's hard to know whether we are embedding the work that we're trying to do across what is a very disparate organisation and a very large organisation.
That's very helpful. Just to reconfirm, Sam has had to go to a peer review, and has been called into several meetings as part of that. And unfortunately, that had to take precedence, unfortunately, which unfortunately meant I then had to present that report. And just to build on that, at the last meeting we did have Billy Webster and we did have Andy Wild here. So and Sam has been to several of these audit committee meetings before. So and also Tim Collard was here as well. Sorry, as well. So that's 4 of the 8 directors. So that's a helpful start. In terms of portfolio holders, that obviously is a decision for the for cabinet and administration. But in terms of everything that I've heard to date, I don't think there'll be the slightest problem with more portfolio holders turning up in relation to the requirements of the audit committee. That's the bit that we need to. It's not about challenging the administration for certainly as Duncan just said, just purely on performance or whatever. It's about the audit element of this, and there are lots and lots of links in with that, absolutely. But we need to make sure those links are there when they're invited along. Otherwise, we will be questioning for the wrong kind of outside the remit of the committee. So let's say.
Yeah, I just a couple of points really, and it's my recollection of a director coming in to discuss the Northwest Relief Road, and the challenge that the committee had at that time to that individual was then picked up by external audit. So I think it started here. My recollection is it started here first, and then external audit picked it up. And I also think the continued limited assurance piece that's been going on now for 6 years was also picked up here first and then reflected by the external auditors. So that's my recollection. If I'm wrong, correct me, but I think that's what happened. So my view there was the audit committee did a very good job, which was then highlighted by external, which then I think actually got a lot more attention once it was, rather than the initial investigations and interrogations, if that's the right word, of those issues. Thanks.
Chair. So I broadly I'd agree with that. The only thing I would just add into the mix in terms of the Northwest Relief Road, there was a letter from now on cabinet, Councillor David Vasmer, to the external auditors, specifically saying, I have concerns that they wanted to investigate. So that was also a factor in, it wasn't purely just the audit committee. But I would absolutely agree that the work that audit committee did fed into the reporting that came from external audit as part of that, because in simple terms, the information that was, the concerns that were being raised by the councillor were dealt with quite quickly, whereas the issues that actually went on to form the basis of the main of the report did come from audit.
Any questions on this, Malcolm?
Yeah, apologies, I'm mixing two things up. So we've just heard about the audit plan for this year. We had that earlier. So does this report effectively reflect the audit plan from last year? And should there be more tie-up that say, look, we've got a list of tables of things we're going to audit for this financial year. So at the end of this financial year, should there be a tie back to that plan to say that's what we said we'd do? Actually, this is what we did do. We did all those things, but we didn't do those things for whatever reason.
Certainly, I think, from an internal audit planning perspective, there's a bit of a demarcation between the role of the committee and the committee's work plan and the work plan for internal audit in terms of the operational audit work that's going to be delivered. And I think, when we're talking about the actual plan for the committee, I think we just need to focus on what reports are coming into the committee and at what point, and then the annual assurance statement from the chair of the audit committee to full council can then consider those points moving forward. So I think it's within the remit of the committee to make that decision on based on the information that's been presented to the committee throughout the year, really.
Yeah, no, I think, and that's sort of what my hesitancy in the question, because I get there is a distinction between the internal audit that your team run and then the audit committee.
Yeah.
But there must be a big overlap between the two, and I'm just wondering whether that's something we should consider for future to sort of include that as part of the audit assurance report that says, retrospectively, that's what we plan to do from a wider audit perspective.
Yeah.
And this is what we did do, this is what we didn't do for valid reasons, just to sort of tie it back. Yeah, just.
I can come in if that would be helpful. Similar to those themes, I'm just thinking of a way to include that in the most appropriate way in this, because this report is essentially assuring council that the committee has fulfilled its role. So taking your point that, because actually the work we did was based on all these reports we received from internal audits. So one of the reports we bring, the performance report or the annual report, lists the audits that the internal audit team have done. You could easily add that as an appendix to this assurance report to say, and we are basing our opinion on that we fulfilled our terms of reference on all of this work. That could be a fairly simple way to tie it up.
And the two come together because we're saying to the council we've only got limited assurance based on your views to us, so we're blending that. Okay, with that clarity, are we happy to approve the report to go to? I hope we are with the council tomorrow, isn't it? To approve council, to have a mover for that. Reese and a seconder. Kate, all those in favour? Thank you. So, we're 2 minutes early. We've got to 11:30. Right. They're not here. What do we do?
I'll just carry on.
Carry on.
Introduction.
Okay. I'll remember that when I present it tomorrow. I'll have to look out for that. Okay. So we're moving to 8 and 9, which are going to be considered together. And I'll introduce James.
Thank you, Chair. So, say colleagues should hopefully be joining. There's 2 colleagues due to join online. I don't know whether they're there or not because I can't see behind the sign. And there's, okay, and there's also colleague Cheryl Sedgley who is the chief accountant, basically, who is due to join us in person, but he's currently with the peer review team at the moment, due to finish at 11:30 and then walk across the building. So 2 reports here. The financial outturn, which is at item 8, and the statement of accounts, which is at item 9. So if I talk you through them, the reason they are brought together, I talked about this at the last meeting in June. There's 4 key papers here: the outturn report, the statement of accounts, the annual governance statement, and the audit plan from Grant Thornton around this. So you've seen the audit plan and you've seen the annual governance statement, both of which were the annual governance statement was then published on the website and signed off by the leader and the chief exec. The statement of accounts was produced, and that drafting set of accounts, which is what you see here, was published on the council's website on the 30th of June as well. So the outturn report at item 8 is basically the information that is presented to Cabinet over the last 12 months in terms of the monitoring reports, so quarterly, but in fact at Shropshire, the monthly monitoring reports. It's the final monthly monitoring report for the financial year. This is where everything has been reconciled, the final figures have been brought in, the all accruals have been moved to take income and expenditure in and out of the correct financial year, and this is the end of year position. This is then reflective of the position that's shown within this statement of accounts, which is why we bring the 2 things together. The statement of accounts, however, it's more difficult to tie the information in there directly back to the monthly monitoring, which is why we bring the outturn report here so that you can see that link between the monitoring. This is where it ended up, and this is what the statement of accounts is saying. So in terms of the outturn report, and this has already been considered by Cabinet, and this has already been considered by the Transformation and Improvement Overview and Scrutiny Committee because of the timing that related to those. What this paper shows is that at the end of the year there was an overspend in the financial accounts of £34 million. Now that is a significant, highly significant overspend, more than was anticipated, and at the end of the year adjustments needed to be made to ensure that the overspend was contained within the available resources that the council had. So feeding into that, you can see in table 1 the areas where that overspend came from. To put it in very simple terms, the People Directorate overspent by £31 million compared to the available budget. What that reflects is the level of demand fundamentally. That's a very generic term, but it's a level of demand that includes complexity, that includes income collection, that includes numbers of people. But fundamentally it's driven by what's coming through the door, however that comes about. The Place Directorate, however, and these are the historic directorates, by the way, this has shifted will be shifting in the 25-26 financial year. But the Place Directorate, the services that made up the Home Place Directorate, the overspend there was fundamentally more around non-delivery of savings rather than demand coming through the door. Resources Directorate and Strategic Management Board, much more numbers, but again the same position. It was fundamentally about non-delivery of savings. You'll see on the top of the next page there is the corporate line. Corporate is kept out of the service areas. Effectively it's part of resources, but it does distort the Resources Directorate if you include it. So had I included those together, you'd have ended up with an £11 million underspend in resources, which would look really good. But actually it's not about that. It's about those corporate overarching areas. So you'll notice the corporate figure is a big minus. The figures in brackets are a minus. So the budget was a minus figure and the controllable outturn was an even bigger minus figure. So what does that mean? It means that the corporate budget was based around grants, for example, large significant corporate grants applied to different parts of the organisation were held there, but also things like contributions from reserves all go into there. So the controllable outturn at 31 million means that more income, more grant or more reserves were applied into those areas to bring that figure into a negative position, which is why you end up with a minus £16.6 million, which offsets the £50.8 million, which would otherwise have been the overspend. So a couple of things happened at the end of the financial year. The position around adult social care in particular worsened quite significantly, and there were a number of reasons as to why this happened. Areas that were built up over the financial year that were not demonstrated within the projections as they stood as the year progressed. Some things that worked their way through that were being challenged right up until the end, and unfortunately that challenge didn't then result in the position ending where we wanted. This could be around contract payments, this could be around income collection, this could be around contributions from other organisations. So those together pushed that position into a worse position. To counter that, there were some areas around grant income, particularly in the corporate areas, where there was more grant came in at the end of the year. This can happen. This regularly does happen in areas where Section 31 grants come through. It's very, very difficult to estimate what that is, so we have very prudent estimates around that. Those came through at the end of the year and helped offset some of that. We also, if you remember, had the capitalisation direction. So this was around a discussion with government that enabled us to fund our transformation costs from borrowing as opposed to from capital receipts. The costs of transformation that we were able to charge, the amount of capitalisation direction that we needed to use was lower than the direction that we were given. The amount we were given was 26.9 million. Actually, as a minimum, we could have halved that in terms of what had to go through that. So what that enabled us to do was to take expenditure that would otherwise have been charged to revenue reserves and charge those against the capitalisation direction. What that then meant was that we maximised out the capitalisation direction, which was helpful because that gave us more flexibility. It meant, therefore, that we could apply money back into those reserves. At the same time, then that money available in reserves could then be applied into the accounts to offset that overspend at the end of the year. So all of these factors were being worked through at the end of the year to ensure that we ended up in a balanced financial position. As a result of all of that, we have maximised out the capitalisation direction, although that needs to be reviewed and assessed by Grant Thornton as they go through. So there may be elements in potentially that they question or challenge us around that, although we're comfortable about what we've built into that. All of that flexibility was worked through. What that means, though, is that reserves that would have been could have been carried forward and could have been therefore used to increase flexibility in 25-26 had to be used in 4-5 to balance that position. So, but the good news is that we got through the end of the financial year in a position that was legal, and that's our kind of minimum position in relation to that. So that fundamentally summarises the outturn report. There is far more information in relation to the capital programme, and in the appendices it tells you about where those levels of overspends and underspends sat and the reasoning behind that, but it will all fall into that overarching summary that I've just given. There is information then around the changes at the end of the year in the outturn, delivery against savings proposals and where they've been carried forward, where they've been dealt with over the financial year. Talks about one-off pressures and ongoing pressures. So lots and lots of information to try and describe what that end of year position is. Appendix 6, I'll just quickly draw your attention to because this is around the general fund balance position. So we started the year on £8 million. So this is the amount of money that we hold as an organisation for general risk managed purposes. So an assessment is made every year as to what our level of general fund balance should be. given the size of the authority, given the spending within the authority, and given the risks, the financial risks that are within the environment that we work within. And those risks can include non-delivery of savings, but they can also include, pay inflation has been estimated at the wrong amount, or interest rates relating to borrowing. So the contingency I talked about before are not at the right level, etc. So we risk assess that level. It's significantly in excess of the 8 million that we held at the start of this year that we should be holding. It's more like 30 to 40 million pounds is the benchmark that we were expecting to get to. So what we then did was contributed, and we budgeted to contribute 30.6 million pounds into reserve. Now, how do you budget to put money into reserves? Well, what you do is you build up within your medium-term financial strategy amounts that you are budgeting as a one-off to move into reserves. They don't then exist in the longer term. You put that money in, and then you take that cost out in the future years. So the savings that you need to deliver are just moved forward as a result of that, because you have to. If you didn't put the money into reserves, then you wouldn't have to find the savings quite as quickly, because it's a one-off. You have to find the savings anyway. It's the simple way of kind of putting it. So we were planning to have a level of reserves of 38 million pounds had we had no overspend. Given the level of overspend that we did incur, that meant that our level of reserves dropped from 8.2 to 4.8. So not unreasonable, but certainly not the position that I would like us to be in as an organisation. There's Appendix 7 covers the HRA. I won't talk about that, but Appendix 8 then talks about the earmarked reserves. So these are the reserves outside of the general fund balance, and you can see movements within there that demonstrate the way in which that money has been taken in or out of those different areas. The capital programme then is shown in Appendix 10, and then we have the summary in the summaries in later appendices. I won't go through those in detail, but I have taken any questions on those. The statement of accounts, just very quickly in terms of that. So you've got the covering report at Appendix 9. So the outturn report was drawn together at the same time as the statement of accounts. So in previous years, the draft statement of accounts was published by the end of May. The outturn report will therefore be available at the end of May. This year, we took the decision to work to the end of June, which is the statutory deadline, and therefore we worked on the outturn report over that same time period. So we published that on the 30th of June. The deadline then for the audited statement of accounts is to be completed by the 27th of February 2026. Grant Thornton have now access to the published draft statement of accounts and are working to a timescale of December 25 to complete that work, with a plan that they will be bringing reports through in November to Audit Committee to establish the work they've completed at that point in time. So the statement of accounts itself is shown in the first appendix. This is a big, long report that takes a lot of work to pull together. There's a narrative report, and then there's the standard statements that fall within that in terms of an income expenditure account, a balance sheet, a cash flow statement, and a movement in reserves. There's a space in there in section 3 for the audit opinion to go in. That will be added when the audit opinion has been completed, but we just show that as a blank set of pages before we get into those core statement of accounts. So a significant amount of work goes into producing those core statements, but they actually only make up a small amount of the actual statement of accounts. In section 5, you then have the notes to those. They cover off the accounting policies, but also within those first tables, you'll see references to each of the notes in the appendix, which sets out then more information that tries to help explain the way in which those figures have been pulled together. We try and get the balance right. We're trying to add enough information that makes the notes usable and useful, but obviously if you add too much information, then the reports get so long that actually nobody reads them anyway, and so you can lose some benefit through that. What we also add is Appendix 2 is an analytical review. So this goes through each of those notes and each of those core statements and identifies any areas where there are material variances between the previous year and the current year. Those variances are around 8%, sorry, 10% or £8 million. Get that the right way around. £8 million or 10%. And so wherever there is a variance of that level, irrespective of whether it's a big figure or a small figure, there will be a description of why that has moved. That tends to be where people start. And so I think if we didn't provide that analytical review, then we would just have lots and lots of questions from audit committee about what's happened here, why is that moved by such a huge amount. One thing I will say is the pension fund is included within our overall accounts. The pension fund has the ability, given the size of it, to completely skew figures from one year to the next as they go in. Go in and out and move through the accounts. So often there will be lots and lots of points around the pension figures. The pension element, though, as will have been talked through when Grant presented the paper around the pension fund audit plan, that is discussed in detail at the pensions committee. So it's perfectly valid for audit committee members to raise questions around that, but be aware there is another forum in which the accounts are considered by the individuals that have a clear focus on what they include. So that's quite a lot of talking from me just to take you through all of that. Hopefully that just sets out the overarching position. As you can see, Cheryl Sedgley has now arrived perfectly on time to enable me to then hand over to her for all of the difficult questions. Thank you.
Can I just thank you for your explanations, because I think you've got picture level exactly right. I think we can understand the issues and we can understand some having your knowledge of having your knowledge and experience, but we can understand what you're saying to us. So just thank you for that. Questions or comments, Kate?
Thanks, James. And I guess, it looks like it took an awful lot of work and a lot of imagination and all legal, obviously, to get us to the position where we remain legal. And so I guess I'd just like to congratulate the team for being able to achieve that, because I can see that it's been very difficult. I had two questions really. One was around the detail at the end of the report is interesting in looking at where we thought we'd find savings, and I think it is worth saying how many savings the council did achieve during this time, but we thought we'd find savings and we didn't. It's not exclusive, but a lot of it seemed to be around imaginings of where we could make savings in staffing and contracts. So I guess it was a comment around that, and also I'm imagining you've given that some thought, but obviously we need to avoid shocks in the future, especially from the last two months. And the second question was, obviously the general funds are low now. They're not where anybody would like them to be. I'm guessing there's discussions around how we can increase those so that we're not in this situation again.
Thank you. Comments, if that's okay, James. I'm going to come back to any other comments, Carl.
I've got quite a few questions, unfortunately. The first one is going to the outturn. The RAGI or RAG status, that explain there's a brief methodology on it. In this case, it's called RAGI because obviously we've added yellow to it. And then yellow, we've got yellow as an underspend of more than 1%. When I then go down and look at the corporate budget, I see that as yellow, but what I'm seeing is, and correct me if I'm wrong, I'm seeing effectively an overspend of 16 million. Am I correct that
shouldn't really be yellow.
So through Chair, the 16 million in corporate is an underspend. So the income budget was exceeded. So there's more income. So therefore it's an underspend in that sense.
So we don't lose time. Do you want to deal with Kate's? I'm arguing against myself. We've got a lot of questions. You might have to deal with Kate's questions first before we go back to council.
Right. So okay. So savings not delivered was your first point in the analysis around that. So we delivered 53% of the savings last year, and the savings that we delivered, the value of that, I believe, was higher than any other authority in the country has delivered in year, which is great, isn't it? But it's not enough. Is the point, you know? So we go so far into what that means. I think the important point that I just need to make sure that everybody understands is that then doesn't go away. That level of budget has been taken out, and therefore, unless we amend our spending to account for that going out, that will always be a problem. So there is no way out of this. It isn't a case of, well, we didn't achieve it last year, so let's start again. It's gone. That money has gone, and therefore we have to deliver that. So what we have been trying to do, and I've explained this in other forums, but fundamentally what you get to is you look at your levels of reserve, your level of resources, you look at your level of expenditure, and the gap between the two, there is a legal requirement to close it. So what I am then tasked with is giving assurance to the organisation that we have legitimate plans in place to close that. So what we had to do in terms of the savings proposals that were there, we had £62.5 million worth of savings in year. That was a big figure. We then had on top of that further demand management savings within adults and children's social care. And then on top of that, we had anything that had been achieved from last year that we're still rolling forward. Lots of those related to staffing. So what we've been able to do is, through a voluntary redundancy process, we've been able to reduce our levels of staffing. We've also done work with external advisors around how we could reduce staffing costs down further. However, the levels of reduction in staffing we felt took us into an unsafe position. So we have, unfortunately, two sets of statutory responsibilities. One is that we don't spend any more money than we've got, and at the same time that we deliver safe and legal services, which are in some cases statutorily defined as to what they are. And so it's beyond a rock and a hard place. You've got, insurmountable in some ways. So we're having to balance that. So what that meant was there were some elements of staffing savings that we then just had to say. We had to say to some people that want to take voluntary redundancy, sorry, we can't let you go. In other cases, we had to restructure in different ways that prevented us from taking the maximum amount of savings out because of the responsibilities that we had. There are still parts of this organisation which are under-resourced, those are under capacity. That's the reality of where we are. In terms of third-party spend, which is another huge area, we have reconfigured the organisation around a new commissioning approach. That is now being put in place. That meant that we didn't have the capacity to deliver those reductions in the last financial year. We won't be able to deliver all of those reductions in this financial year either, but what we're doing is putting in place the foundations that will enable us to deliver them over a longer period of time. So that's what we're working through. And then the third major element is around income. So income has been less of an issue in the 4-5 financial year and will be more in the 5-6 in terms of proposals we get there. You're absolutely right in terms of the avoiding end of year shocks. Clearly, we can't have that. Work has been done to understand exactly what happened at the end of the year to ensure that doesn't happen again, but more importantly, it can't happen again, that our projections are much more accurate around that. And there is reconciliations and other pieces of work, other safety nets behind that to ensure that we're safer in terms of the way that works through. That work is working its way through the system now. So there is likely to be changes in period 1, period 2, period 3, and maybe even into period 4, while we wait to make sure all of that is being worked through. At the same time, I've asked internal audit to take an independent review of that so that I've got assurances from Cheryl, and she can talk you through if that's helpful in terms of some of the things that are being done around that. But more importantly, we're then getting independent assurance that that is happening. In terms of the general fund balance, it is too low. The only way out of that is to budget to increase it, but there is no point budgeting to increase it if you can't deliver the savings that then need to deliver that. So one of the things that we've been talking to the peer reviewers about over the last few days is around how we set out that sustainable plan over a longer period that builds up that resilience around general fund balance, but also gives us more certainty around the delivery of savings. The only way we can do that is a reconfiguration of the organisation. So it's not about taking more out of services, it's about redescribing those services within the envelope that we've got.
I'll come back to you in a moment, Carl, but I just trying to reflect on where we are and what we've learned, what we've tried, and what succeeded and what perhaps hasn't succeeded. Obviously, sometime last year, it was a decision to make a capitalisation directive, to apply for a capitalisation directive. We've not talked about that going forward. I assume we've capitalised everything we can capitalise now, but I note that other authorities seem to be selling off significant assets and have been given a directive to allow them to use that money to support revenue. Are those the sort of issues that we're now faced with? Or what? I suppose I'm saying I can understand you set out that if we do all these things, we will be all right. Our history is that we haven't quite managed to be all right. We thought we were going to be on other things, and so it's almost challenging what is plan B if history repeats itself and we don't quite make the savings. We do very well, by any national comparison, we do extraordinarily well, but we don't deliver the level of savings that we need to deliver. What is plan B? There isn't there, not a plan B, I don't know.
Yeah, and thanks, Chair. The difficulty, I mean this sincerely, although it may come across a little bit flippantly, is the danger of talking about plan B is it becomes plan A. And so what we need to do is to build a plan A, a very clear plan A that is going to be delivered. And I think that's the difference between what we've had. We've had plans over the last few years which have not been robust enough because of the level of unachievement. In terms of exceptional financial support, there are options around what we can do. We are having conversations with MHCLG. So the last conversation I had was literally last week. So we are having regular conversations with the Ministry for Housing, Communities and Local Government. And those conversations are around ensuring that there is early sight of our financial position. And obviously the bit that doesn't fall into 4.5 but does fall into 5.6 is any formal decision taken by council around the North West Relief Road and the writing off of those costs, because again that has the potential to fall on revenue, which again has the potential to require consideration of exceptional financial support. In a nutshell, Chair, what we're not doing is planning for EFS and then using that to work out the plan. What we're doing is we're producing the plan, and then on the back of that we'll work out whether there is a necessity for some forms of EFS to enable us to enact that plan. But the plan needs to be significantly more robust, I would argue, than we've seen over the last few years.
I'll come to you in a moment, Carl. I suppose that's partly in terms of people who are not intimately involved with the accounts and the financial situation of the council, just the language that's used. We've used challenging for years. I think I first joined the authority before we had a challenge. And so challenging, extremely challenging, and those are the words that appear in these reports. But I'm just wondering if we've really moved beyond that to a crisis, because there needs to be some sort of recognition that we cannot carry on as we have done, and challenging is what we've always done. So I'm just putting it out there to say, have we thought about the words we use to describe the situation we're in, the impact of those words? I'm not asking you to answer the question, is there a crisis? I'm just trying to say, have you thought about how we explain to the organisation the reality of the situation we're in?
Thank you. When it comes to corporate budget, I'll speak to you later on that. There's obviously a slight lack of understanding on my behalf, which I'm honest now makes me a little bit nervous on the questions I'm going to ask going forward. So I've been looking at some of these different budgets, and the first one that came to my There was adult social care operations, which is an overspend of 17 million. Excellent. The two key points I picked up there was 8.19 million on supported living spend and 5.6 on the spot purchases. And are you able to just give me a brief explanation of what is driving that increase? It is quite high over the period, and is there a chance it could happen again going forward into the next financial year?
Okay, so I can give you a brief overview in relation to that. So the reason those overspends there is because in terms of the supported living, this was the level of cost associated with that initiative was higher than anticipated, given the organisations that were used there. The spot purchasing, I suppose the spot purchasing is, in a sense, is the more concerning, because what spot purchasing is basically saying is we have contracts in place that will enable us to place people in levels of care. And where we then have to be more reactive and we don't have enough kind of planned places, we just have to quickly put somebody into what's called a spot place. They are more expensive, and you're more at risk of the market in terms of what you can get over that period. So what we found was that there were, if I remember correctly, there were people discharged from the health from health, and as they were being discharged and effectively were being pushed out earlier than we were expecting, or without enough notice kind of that happening, they then get pushed straight into a placement because they can't be rehabilitated in the right way to do that. So they end up going into a very short-term spot placement, which costs significantly more. It's about ensuring, A, that doesn't happen because there's better outcomes and it's lower cost, but also it's about the visibility of that where it does happen, because those figures there are figures that happened over the year, but there was insufficient visibility of the financial implications of that to feed through into this report, which is why it came through towards the end of the year.
Okay, thanks. Moving on, children's safeguard and social care, getting quite high overspend. The point I picked out in this was 1.4 million on agency social workers. Obviously, there's a lot of concern when it comes to contracting that and that level. Going forward, are we looking at reducing agency, bringing in more full-time staff? Possibly something that the administration may need to look at closer.
Just very quickly on that one, the amount of agency spend across the authority we're looking to significantly reduce. Roughly speaking, it was about 13 million a couple of years ago. We ended at 12 and it's come down to 11, so it's moving down, but it's not moving down to zero. A lot of that spend is with adults and children's social care, and that's simply because of the market. So where we can, we are transferring staff from agency into onto the council's books, but that requires the agency and the individual to be willing to do that. And we're recruiting. We go through apprentice programs. There's lots of things that we're trying to do to build that up and reduce our reliance on agency. But when we have, it comes back to that safety question. It's that same point. If you've got too many cases, too much casework for the number of social workers that we've got, we have to increase the number of social workers. And if you can't recruit, you have to go to agency. And then when you can't then bring those in, or you can't recruit to bring in somebody permanently, you then extend that agency. And before you know it, you've got a vault of people there that it's a difficult one.
Just to add to that, the Children Improvement Board was set up a couple of years ago, and that has focused on trying to ensure we've got a better capacity around our own workforce. And National Lions and Aging has had some success, but we've actually got it on our work programme, haven't we, to have children's services come here so we can perhaps explore that with them when they do.
Oh, thank you.
Go to Jim.
Yeah, it's just going back on to a point, an answer to one of Carl's questions. You mentioned that the increase in cost towards the end of the year on adult social care was due to the lack of visibility. What steps have been taken to improve that visibility so you know what's coming toward the council?
So when I say visibility, it was that the processes that it went through didn't then result in those projections reflecting all of that. Now, some of that was because that was information that was not known to the organisation, to the council. So we're having to follow up on that in terms of speaking to the organisations that we're working with to make sure we don't then end up with bills coming through at the end of the year that we were incited on, for example. There is also visibility around we've got the finance system, but actually within social care, we've got the liquid logic system. That's where everything gets added into the system in terms of casework. Again, it was about ensuring that all of that is updated and is up to the values associated with that then are feeding through into the RP appropriately. So again, if there's a lack of update or a lack of reflection of the final position within that is, again, from looking at it from a finance point of view, you'd say I haven't got visibility on what those figures are because they're sat in a different system or they're not yet in that system. So I mean it's quite a generic term in terms of what that was, but fundamentally it was about not having a clear sight of all of the information that was necessary. So what we've done on the back of that is listed out okay, where are all those areas of significant variance, but also where are all the areas that could have been a significant variance even though they didn't appear that way, because all of that is the same point. And then working through between the service area and the finance team to ensure that though each of those lines are drawn across through the different systems or the different processes, and that's the bit that I'd like internal audit to then look at to make sure all of those things are happening. Does that, so that's been done, or that's in the process of being done at the moment? So we've done the first part, and as I say, Joe will sit here now and say, I think we've got the process in place that ensure that won't happen. What now happening is the internal auditors are going through and speaking to spoken to me, speaking to the finance team, speaking to the service areas, just to make sure that there isn't anything else, because that's what I'm concerned about.
Given the numbers involved, I'm minded to put it on our work programme, so we, as the audit committee, have a look at that when the time is right, because then the spot purchasing and the supported living spend were very considerable elements of the overspend. So if that's, we'll come to recommendations, but I think it's one that we would put onto our work programme, for this year. Okay, sorry, you still got more questions, Carl?
Yes.
Okay.
Yes, of course. Moving on to children's early help and placements, again, a considerable overspend, a 28% increase in the last 12 months. Obviously, we want to ensure that doesn't happen again in the next 12 months. Are you able to give a brief idea of what has driven that such a high increase?
I wonder, Carl, whether that's also for when children's services come to us, we'll have the actual people making those decisions rather than the director of finance, and they'll be able to answer those questions, I think, more comprehensively than James. I mean, I'm not saying, I'm just trying to get best use of our time. I think it's better to ask that question to people who are making those decisions. But comment on it, but
I mean, I can really only just slightly flesh out a little bit more in terms of what I'm seeing is, what I'm hearing is that the numbers of children that are coming through in terms of placements is levelling off and going down, in fact. Yeah. But the levels of complexity and the levels of placements in terms of external placements is where the pressure is sitting. So that's why we're seeing that increase over there.
Foster caring is gone. We haven't met the number of foster carers we had hoped, I think, is the other factor in that, which is a much more higher quality outcome for the children, as well as being a more cost-effective outcome.
Yeah, so I did make a note. I'm assuming that the overspend foster care because there isn't enough foster care out there. So then when I look at learning skills, there's an overspend there. I assume that overspend for homeschool and send is because of that previous increase of 28% on children's early help. No, sorry.
Sorry, Chair. The homeschool transport increase. This is just dependent on the number of children that are presenting that need transport. I could talk for a long time on this, but I won't. Very quickly, the catchment areas around schools, there is a legal requirement for the local authority to provide homeschool transport above 2 and 3 miles, depending on what that is. If you live in an urban area within a mile of your house, you'll have 3 or 4 schools. In a rural area, there is one school that might be 4 or 5 miles away. So we have to transport a lot of children, and then you have the special educational needs element of that as well, which is on top of that. So I think from memory, we're spending around about £18 million now on homeschool transport, which is the whole academy element puts the burden on the local authority, because academies can open and close wherever they want, and we have the responsibility to move those children to school.
I've got a few more because we're just conscious of time.
Yeah.
That's urgent.
Highways, just we kind of knew around the election that there was a highway contract renewed with Kia around the election time for over 12 months. And I was a bit miffed by that, because we also got an overspend as well. Is there any reason why that contract wasn't delayed rather than given for another 12 months? Do you know? So that the new administration could maybe possibly get better terms.
I can't really discuss the contractual position in a public meeting, so I'm not going to shy away from it, but perhaps we could have a conversation separately about it.
That's fine. Last question really. Climate change budget of 212,000, an outturn of 139,000, and a variance of 352,000. I didn't quite understand that. I don't know if you can. It just seems a bit of a strange variance.
Okay, so the climate change budget is actually a minus figure. So it's assuming that there will be income, which, looking at the information there, is around the pyrolysis plan. So there is so there is an income target that's due to be delivered, ostensibly from pyrolysis and the solar farm. Those two together would then, they're accounted for within the climate change budget. So you've got the cost of the team, and then you've got this massive income potential. So therefore you end up with a negative budget. That income's not been delivered, but the staff have still been paid. And some of the costs of implementing that income stream are there. So effectively, we were intending to deliver £213 million worth of net income. We actually spent £140,000 of cost. So you're supposed to have this income, you actually spend this cost, so you end up you're £350,000 to the worst, to the bad in relation to that. That makes sense.
Got it?
Thank you very much for this.
Thank you. Okay, I think we probably need to look at the recommendations for both these items, which are for item 8. Ooh, the recommendations. Recommended that the transport and I don't see if there's any recommendations for the audit committee here. Recommend audit committee to consider with appropriate comment the outturn report alongside the draft statement of accounts. So have a mover for that. Okay, Kate, seconder for that. Reese, vote on that one, and then we deal with 9. Thank you. And then the recommendations on 9, if I can find them. Member asked to receive comments on draft statement of account and note the changes detailed to accounting policies used within the statement of account. So I have a proposer for that as well. Reese, and seconder for Kate, vote on that. And also those recommendations, we note that our future work plan will incorporate spot purchasing and the other issues, supported living in adult services. So we're consider that in the future. So I'm almost confused now. That deals with 8 and 9. I think we've dealt with all the items on the public agenda, unless anybody else knows differently. You think we have? There's a chance we might have done. So that brings us to, bear with me a moment, that means an exclusion of the peasant public. So in accordance with the Local Government Act, I hereby move that the press and public are excluded from consideration of the following items of business. Do I have a mover for that? Great. And a seconder in Reese, move the press and public. Thank you very much.
Just I'm just gonna end